All right, and welcome back to another episode of the Self-Directed Podcast. Today, another very special guest. They're all very special guests. Thank you, Nate Baker, who is the Deputy Director of Grassroots Operations at Americans for Prosperity, is a Praxis alumni, and has got a great story to share with us today about his experience with college, with student debt. Lots of perspective to offer here. And Nate, I'm going to turn it over to you just to introduce yourself. And then would love to just kind of hear more about, I know we sparked a conversation from a post a while back and thought that it'd be awesome to get your perspective on this. And then we'll dive into your story a little bit more. So take it away.
Sure. Yeah. So I, unlike a lot of Praxians, did start off my journey in college for 3 years. And I did Praxis back in 2016, one of the earlier cohorts there. And student loan debt is something that I'm much more familiar with than a lot of Praxians. I know you made a post a while back about seeing a lot of these Praxians in their early 20s, buying their first homes, investing in rental properties, and just taking advantage of a lot of opportunities. And I really want to encourage basically those who are considering going into debt for college to avoid it at all costs, period, full stop. And also congratulate those who did drop or opt out on their decision to not do that. And really help them understand how significant of a cost that they avoided. And so especially with a lot of these folks that are making this decision with some social friction from their peers, from their parents, like I want to say, you actually did do a good job. So I want to illustrate that. So A little bit of context. So I married my high school sweetheart, and this becomes significant when we talk about family. So Initially, I went straight from high school to a four-year university for ROTC before I decided I did not want to commit to that path. Did not have much in the way of scholarships, like a lot of folks, millions. I think like 43 million Americans have federal student loans. I funded my college with student loans. So I hated college. I really got to the point where I resented it. I did do a lot of extracurriculars while I was in college. I met some great people. I worked with a lot of student startups through a great program there and presided over 2 very active student groups. But despite all of that, I really recognized the scam that I was participating in. And I left after 3 years to do Praxis in 2016 in one of those early cohorts. So I launched my career, never looked back. It was my suspicion was confirmed. I was going to have the same opportunities without the degree than with. And it's also been interesting because my wife got her degree in 3 years, graduated with honors without student loan debt. I left after the same time, and our careers have been very much parallel. And so it kind of made it more painful to realize wow, all of that loans, really the only legacy of my time there is this burden that both my wife and I have to share. And it's really all for nothing. There was really no benefit whatsoever to it. And so my wife and I got married at 22. We've been dating 7 years at that point. We always wanted to start a family young. So we had our first kid at age 23 and our second kid just a few months ago at age 25.
Congratulations.
Thank you. Yeah. And so as we move through these life stages, you start to really see the opportunities that you're missing because of these student loans. And student loans are really a uniquely bad sort of debt because, it's not like you can imagine somebody who's finances a car, they're young. This is notoriously the case with people who join the military. They go buy a car that they can't afford and they get upside down in that vehicle. So first of all, if I was going to go try to finance a sports car, I probably wouldn't be approved for the loan because they know better, unlike student loans of the same magnitude. But even then, at the very least, even if I buy some $100,000 sports car and I get upside down on it and I can only, I owe more on it than it's worth, I could still have a sports car to drive. There's still some benefit from that debt. And if I really need to get out of that debt, I can sell that asset and at least reduce my costs. But with the degree, that's not the case at all, or college at all. There's no asset. There's nothing to enjoy as a result of that. And there's nothing you can sell to recuperate any of that cost. It's just a dead weight loss. Yeah. And you look at this, after years of checking semester by semester, seeing that debt amount go up, that was a contributing factor to me leaving. You're in a situation where you're looking at, initially we owed, my wife and I, thank God she didn't have any debt. We owed more than both of our starting salaries at our first job combined was how much we owed. So you start doing the calculations on that and you start looking at how that's going to impact your cash flow. Yeah. And you realize, wow, this is really not great. And you start encountering, especially with your peers who are doing great things, especially these talented Praxians, you realize, wow, what could have been at this age. And we're lucky in the sense that we are making a decent amount of money. I mean, even at this point, and this is because we're aggressively tackling these loans, we're spending about half our income. So our dual income household is really a single income household. And that's how you have to live if you ever want to get out of this thing ever. If you decide not to, and you make those minimum payments, you're going to be lighting cash on fire forever, basically. I mean, these things never really go away. And there's a whole series of problems with that. And so what needs to be understood about having basically salaries worth of debt, basically from the time, but even before you start your career, is that it's not just the raw number, the number of dollars that you owe, but it's all of the opportunity costs. There are a number of professional opportunities that I've had to either treat differently or say no to outright because I cannot hop on it with this cash flow obligation.
Yep.
And so, a lot of people want to buy a house at some point before they're in midlife. Well, that's something you got to put on hold. If you want to get married and start a family, I did that, but I'll tell you, it's been much more difficult than without. There's a lot of costs that would not be nearly as stressful without these loans. If you want to have a solid savings emergency fund and you want to be able to save for that, this is that cash flow challenge creates an issue for that. If you want to be able to max out your retirement accounts or save any of your earnings, there's some real costs to that. If you want to be able to invest in new ventures, and this is the thing that's really hurt the most, a lot of opportunities have come along that I know for a fact I would have had the capital to do that. I could not. I had because I had this obligation every month, and I would just log into these portals every month to pay this massive chunk of my earnings away. And I'm realizing that, that's what debt is. You're spending your future earnings now to get nothing in those 3 years. And now I'm on the hook for all of that. And if you want to have the flexibility, which is where I see probably the most valuable thing that I haven't been able to do, is have flexibility to quit a job and start a new promising opportunity because you can have your cash runway, like little things like that. You're a slave to making sure you are maximizing income. And you don't even get to reap all the benefits of that income. And, I'm driving an old car. There's all these things that I would have loved to, and would have always imagined at this point in my life, I would not be living. And that's all just the cost of these loans. And just the little things that you want to afford that you can't. And that's if you're being responsible. Yeah. And in terms of starting a family, you want to provide an environment where your wife could stay at home with the kids if she wants to provide that to them. You can't do that. We both got to work. We both have to kind of do the roles of both the mother and the father, depending on, your views on that. So that's just kind of a rundown of the costs. And one more thing I'll say on that is it's not just the cost now. You talk a lot in this podcast about compounding opportunities in your 20s. Yep. And so it's not just I forgo something at 22. That opportunity that I could have taken at age 22, 23, at age 26, could have been something, that trajectory is off limits to me. So I'm putting everything on hold. I'm putting everything back. And so it really can just kneecap your opportunities in a way that I think most people looking at just kind of defaulting to taking on a loan. Hey, well, that's what you got to do. And they don't realize that that's a decision that they really need to take seriously. They don't realize the cost. I certainly didn't. And I do consider myself smarter than the average bear, but at that age, you're just not thinking in those terms. So that's a rundown of the costs. I mean, that's.
Thanks so much for man, there's so many things I want to touch on here and unpack a little bit with you. One of them that you earlier brought on, you brought on the example of student loan debt compared to other debt. And I think you make a good point where it's you buy a car, you buy a house, whatever, you buy any type of physical asset, assuming the bank's going to give you a loan at 18 years old, the same eagerness that they write student loans, and not just the bank. Usually it's the federal government that's writing these types of loans that are, not really a fair assessment of risk, but you can't, even if you are upside down, let's say you owe more on a house or car that you buy than it's worth, and you go sell that and you're still upside down on that loan and you don't have the ability to pay off that deficit. You can't go discharge student loan debt in bankruptcy as well. I think there's now some possibility, really long roundabout way, but it's not as easy as filing for bankruptcy, where even if you do file with bankruptcy, it takes immediate hit to your credit. You've got 7 years on your credit report where it's nobody's ever lending you money, but then after 7 years, it goes away. But today's average statistic, which is absolutely alarming. And I think should be a red flag for any family or young adult that's thinking about student debt, is the average age today when people are paying off their final student loan debt is 45 years old, which is an absolutely alarming statistic, because I think about where I was, I consider myself a smart kid as a teenager too, but like my knowledge of money and personal finance and how all this work and opportunity costs and future earnings and cash flow, I didn't know anything about that. And so that's kind of like the setup. I want to turn the tables for you as you were making this decision to go into school, to go to 4-year school, and like how to fund that and signing up for student loans. Like what was your level of knowledge there? Were there people that were coaching you or giving you advice, or like what was your headspace in that? Because I know at that age, I didn't know anything about anything. And if that's the way I would have had to pay for college, I would have signed it up. I wouldn't even thought twice about it, because that just seems like what you're advised to do. So like, talk me through where you were and what resources you had and what level of knowledge and like competency you felt like you had about what you were about to do.
None at all, because the default, you don't even think about alternatives. At least I didn't growing up. Middle class, you go to high school, the next step's college. Yep. It always has been. That's always the next piece. And if you don't have the scholarships, well, we'll pay for it later. That's just kind of the prevailing ethos. And you know that it's going to be some loans. You don't really understand the extent to which that's going to impact you. Because you'll be making money in the future. Everybody does it. It's just what you have to do.
Yeah.
But that's not the case. And one thing I've really gotten some perspective on since then is just realizing that, a lot of times, and I'm not just going to try to like crap on the baby boomer generation, but there is this sort of ethos of like, well, that's just the way of life.
Yeah.
And so they don't really help, you navigate that decision. And a lot of it's because a lot of our elders who are encouraging people to go to college, their reference point for college is like how it was in the 80s. So they don't really understand. And you can't really blame them, because they think college, well, when I went to college in the 80s, it was doable. And if it's a little bit more expensive now, sure, but they don't realize the extent to that, not just in tuition.
Well, and the value of it, let alone like the cost and then the tuition costs as a function of what you could expect to earn on the other side of college, where it's like, that's staggeringly different today.
Right. But it's not even the same. It's not comparable. The idea that you can go get this degree, work your way through, because I had 2 jobs. I had as close to 40 hours as I could get, because everyone's competing for those same jobs there. And it still wasn't enough. And the idea that you can go work your way through, get this job and knock it out is just not the case anymore for the vast majority of people. And they don't really fully appreciate that. And also there's this social idea, like this idea that to be middle class, you go to college. That's it's more of a social signaling than it is any sort of human capital signaling or anything of that. And so for a lot of parents, they're just like, well, you got to go to college, right? Yeah. And if you don't go to college, it's almost like, did I fail as a parent? What does that mean? And they're not thinking about it either. And a lot of reasons they're not thinking about it is because at the end of the day, they're not making that financial decision. You're the person who's going to have to be paying it off. So I think you need to consider the source a lot when people are kind of advising you to take on the loans. But as far as that discussion moving into this, there wasn't a lot of discussion about it other than, this loans, we just take them out, got to pay for it.
Yeah.
And the only time that I really interfaced with it was semester over semester when I would get the new number in and looking at that bill moving up. And I would just think to myself, this is not sustainable. And I would never pay. If I were to say, hey, 18-year-old, tomorrow you're going to go have to buy a brand new Porsche Cayenne in cash. It'd be like, what are you talking about? But yet, that's basically the amount of money that I'm spending for those 3 years of college. Yeah. And so, to answer your question, not a lot went into it. And that was just the default path. You just go to college.
Yeah. Well, I'm gonna push back just a little bit on one of the things you said, and not so much to disagree with you, but to let parents off the hook today, because this is a realization I had recently, like talking with my parents, with other parents, with other people that are kind of in that previous generation, about just simple things, about like all the different finance tools today, even like credit scores and credit cards and all this. And just like parents being like, that just wasn't around when we were your age. That wasn't around. There weren't things today. And I think sometimes it's easy to forget how wildly different, how many more options, how much wildly different it is today than it was even one generation ago, let alone like 2 generations ago. I think back, this is a shocking statistic, honestly. So since the 1990s, early 1990s, over the last 30 years, more or less, the average college tuition in the United States has risen nearly 300%. The average average earnings, starting incomes of college graduates has remained almost entirely stagnant when adjusted for inflation over a 30-year stretch. And when I think about like parents encouraging their kids to go to college today, even if the kids are taking out loans, parents are working from this frame of mind where they're like, okay, even if I do have to take out student loans, it is a percentage of what I can expect to earn as a result of going to college, those types of wages that I can access. But the truth of the matter is, one, those wages it's just not there today. The earning potential outside of like going to an Ivy League school or a front page school and then going and working in, like in finance or, in certain portions of tech, going to work at like Google, Facebook, or whatever. Like there's a very, very small subset of actual college that delivers the ROI on a short-term basis, let alone like a career basis. And number two, I don't think a lot of families go and sit down and run the numbers and do the math and not only do the math about like, hey, here's what the debt is going to be, here's what the payback is going to look like, but also taking that a step further and saying, okay, here's the university we're thinking about going to, here's the field that, here's the level of confidence in what we think we want to pursue as a career and what the likely outcome is today, let alone 4 years from now, which we don't know anything about what the world and job market's going to be like. And having like some level of confidence of, okay, this is going to be an actual sound financial decision that's going to pay off. No one's doing that. I have yet to have a family come to me and say like, we've done the calculus on this and this is a smart financial move. And that's because I don't think people even understand the depth of like what's going on behind the scenes. They go and sign themselves up for these financial commitments because the narrative is just so strong that this is a rite of passage. And that's very much what my experience going to college was in my scenario. And it sounds like, you can somewhat relate to that.
Yeah. What's the other option? I mean, I know it might be expensive, but what else do you do? I think that's a big part of it too, is not realizing because the world's so different, the other options that exist and that they're feasible. And no one wants to be the one to try that out or stray from what they perceive as the safe path, when the truth is it's not such a safe path.
Yeah.
And yeah, they just don't know. And because it's such an easy decision socially, that's the next step anyway. They don't ever really sit down and evaluate that. They don't do the math. They don't run the numbers.
Yep.
And so, yeah, like I would hope that my experiences and just observing others can show now that some people have made that decision. They can look at those costs and maybe, and also to your point, I mean, people now understand it more than even 7 years ago when I started college. They see the problem as more pronounced now because a lot more people are going through what I'm going through. And so the kids coming of college age now have more data points, and the parents are seeing that a little bit more now. And now for the first time, especially since COVID, the value proposition of college is actually changing in their minds. And now they're seeing that there are some alternatives. And so you're seeing gap years getting more popular. And so I do think we're starting to see trends away from this. I like you said earlier, the value proposition of the college degree value itself is dropping as the price is increasing. That's just not sustainable, and a correction is going to have to happen. Yep. And so I'm hoping that people, see that more and more. And I think that they are. And I think more of these conversations are happening now than they did 7 years ago. Yeah.
Yeah. I think one of the sometimes overlooked silver linings as I think about like Gen Z today and like the impacts of social media and accessibility of information today. You think about like what happened with Robinhood and Dogecoin, all these things over the past years. Like, I feel like Gen Z is so much more on top of like financial literacy, even if it's like right now it's a little bit haphazard because they're teenagers and they're learning. I feel like they're just so much more in tune to like this cost benefit analysis and somewhat financially savvy as a generation than like what I was, millennials, Gen Y, whatever. I feel like they're a little bit more in tune. They're like, wait, why would I go sign my life away? College sounds boring, first of all, and let alone like, why would I go take out a ton of debt to do this? I'd rather have a rental property. There's just so many more assets and resources out there. And options that are viable and becoming more viable today. So I want to get a couple more kind of moments here in your story before I get too carried away on a rabbit trail, as I tend to do, is you're thinking back to your experience in college. You're getting this, this notice every quarter at the end of every semester, or you're logging into the portal. Like, at what point did you decide to drop out? Was it a function of the debt, or like at what point did you kind of see that debt number and you're like, oh my gosh, I've got to do something different. I can't just take out, another year of student loans to finish this out?
Well, when the number was north of what I thought I would be able to reasonably make as an annual salary in the early career, I realized that's unsustainable. And I also very much resented my college experience.
Yeah.
All of the value that I got out of college during those 3 years happened exclusively outside of the classroom, with relationships, things that I was not even technically paying for. It was a profoundly mediocre experience. I had a lot of ideas going into college because I hated high school. Things will be better now. I'll be around higher quality people. I got there and realized it's just high school 2.0. Everyone's just jumping through these hoops. The standards are low. There's all these ridiculous narratives that college students are told and tell themselves about working hard and studying, and all of that's a lie, obviously. And it just seemed very silly. And then I'm going into debt that just kind of added insult to injury. And I thought that there had to be a better path, but I didn't have really any thoughts on what that looked like. And then I met Isaac at a conference that I attended in New Orleans. And I was like, this guy's talking to me. My wife, a girlfriend at the time, was like, see, you're not the only one with these thoughts. And I'm like, yeah. So that's when I made the decision to leave, because and at that point, I basically just had a conversation with my parents, because they'd known I'd consider it for a long time because I hated it. But again, the thought was, well, what else are you going to do? And I'm like, I don't know. Start my career now. Doing so.
Start paying off this debt.
Right, precisely. And since then it's always been it's never come up. That's the other thing that's really a profound experience, is you think, oh, well, there's going to be this social cost, and to some degree that's been the case a couple of times, especially very early on. Like, you're not fitting the normal pattern, what's going on there. But in just a short amount of time, when things are rolling, people don't even bring it up. And if they do, like, it doesn't even come up. They just assume that you have a degree most of the time. If they do, it's just a point of intrigue. It's not really a stigma, and it's getting, more popular for a lot of these reasons. But when I decided to leave, it was, I had a conversation with my folks, and they knew that my mind was already made up, and I think that's how you should approach it. I can't remember who told me this, someone at Praxis. I was having a conversation that said, your parents want what's best for you, but they don't know what's best for you. And it's really true, because like you said, they don't have some perspectives that you're naturally going to have. Every generation is going to have a different perspective. They're going to be aware of some things that the others aren't. And you have to make decisions for yourself. And that was the best decision that I ever made, was cutting my losses and jumping in. And so, yes, student loans are really, it's one of the decisions that I regret the most in my life is going into student loan debt. And it's a decision that you kind of make right at the beginning of college that haunts you for years. And that's if you're going to get out aggressively. Mm-hmm. If you're not, I mean, it could be to your grave, which is unfortunately the case for a lot of people.
Yeah. Yeah. It's a good point. So I want to wrap it up. Just kind of one other question. So this is for the person who's more, finding themselves in a similar situation as you. They're looking back, they're like, oh my gosh, now I've got a hole to dig out of. Are there financial resources, books, people that you like to listen to, anything like that you found useful for going to get, like sitting down and putting together a plan to deal with this now?
So I am mostly a Dave Ramsey fan.
Okay. Yeah.
When you have a debt burden like this, that is such a weight on your shoulders, the instinct is get out as quickly as possible. Mm-hmm. And that man has helped millions of people do that. I don't agree with him on everything, right? Yeah. I do, David. It might make sense to finance a used car. That might not be the worst case decision ever. Oh, you're going to pay $1,000 in, interest over the course of your, okay, that's fine. But in terms of just having the right mentality and certain tools and budgeting tools to get out of it, there's a lot of resources out there. It's very essential. Have a budget, figure out, how much, map it out on your spreadsheet. What are the payments? There's a lot of great debt calculator tools out there. If I make these payments in this budget, how long will it take? And how do I adjust that? And then just be disciplined about it. But that's really, it's more of an outlook than it is a particular resource that I think is important there. And the silver lining is when you get out on the other side of this, and we're almost there, we're within a year of being out of these entirely, you will have worked up a muscle that most people don't have to. You will basically be able to make certain decisions in the future that you probably wouldn't have others. So you might have stepped into a hole early on, but you did, because of that, set yourself up to not make mistakes in the future as much. I have to tell myself there's a silver lining to this somewhere.
Well, I'm glad to hear that there's some optimism coming out of this, but I mean, you're right. Like, it takes an incredible amount of discipline. It takes a fairly decent amount of time to build up the level of discipline required to get through something like that. And then, when you get to the other side of it, if you can maintain that same discipline and go like, invest or be more deliberate about how you're going about your financial situation. Like, you're set up because you've got that muscle developed. So
yeah, I've lit half my income on fire to overpay loans, or my household income on fire every month. I don't know what I'll do with myself whenever that money doesn't have a place to go. I mean, I actually do. I already have a plan for it.
Yeah.
That's the thing. It's like, wow, this will be so great whenever it's actually usable in the future.
Yeah.
But yeah, there are some silver linings. So I just encourage people to really think about it, really think about the opportunity cost and what that looks like with some of the things that I've said. Talk to somebody else. Like you said, Gen Z now has the millennial generation to look at and say, I don't want to end up like cousin, so-and-so. That doesn't look like a good call. So maybe I should avoid that. Yeah. And so just look at that and trust your gut.
Yeah. Well, awesome, Nate. Thank you so much for sharing more about your experience and perspective here. And here's to you, almost crossing the finish line. Best of luck wrapping that out and unburdening yourself from that and being free on the other side of it. So thanks again for joining us for another episode of the Self-Directed Podcast. You can leave a comment below if you're watching on YouTube, or leave us a review on your favorite podcast platform. Thanks again. We'll be back again soon.